Good morning. Welcome to GrainTV. It's Tuesday, December 13th, a night of relative quiet trading. Corn and beans up 3 cents, while wheat gained 5 cents on the night. Brock, we had some uncertainty still continuing to brew in Europe. What did we see yesterday on that discussion?
Yeah, basically what happened over the weekend, not a whole lot. They didn't have a whole lot come out of there. The debt treaty that they did pass recently has done little to solve the debt crisis. In the eyes of Moody and Fitch. Moody actually came out and said that it's still in a critical and volatile stage at this point, and they're looking at reviewing all the governments early next year to see if they need to make some downgrades to their sovereign debt. As far as Fitch is concerned, there's still a significant threat to an economic downturn, and they also say that the deal that was reached is very insufficient for what needs to be done.
Right. So, bottom line, Europe uncertainty leads traders to come to the dollar and safe haven, so we got to look for strength in the dollar, and we saw that yesterday with a big pop up in the dollar index, didn't we?
Yeah, we did see the dollar gain significantly yesterday, and as the European Union currency is actually the biggest component of the dollar index, so that's what's going to be actually moving this dollar index quite a bit as a result of what's going on there. So let's just take a look at what the technicals are looking at recently. Basically, since the middle of September, we've been meeting resistance at the 80 level. Yesterday, we came up very near that 80 level. I think we hit 79.8, very close to that 80 level. So we're going to be meeting resistance right there, but we've most recently been in a clear uptrend. So I think this pattern is going to continue. If we don't see significant gains made in Europe, we are probably going to break through this resistance level and move a little bit higher. What does that mean for our grains here domestically? Well, when we have a strong dollar index, we're going to have weak grain prices, just to keep us competitive on the export market. Going back to September 1st, basically, you can see denoted by the blue line that corn prices, and denoted by the red line is the dollar index. When corn prices were the highest, the dollar index was the lowest. Conversely, when the dollar index was the strongest, corn prices were the weakest.
Right. As
we move through time there.
So, when we see that 80 index, or that dollar index hitting about 80, that's when we've had 570 corn prices, and of course that's what we're flirting with right now, is breaking that 80 barrier on the dollar index.
Yeah, if we break that 80, go significantly higher, I think we'll probably break through that 585 level that's been supporting us recently on the on the corn chart. So I'm looking at this as pretty significant and very, very critical to our trade right now.
Right. Hey, we're going to take a break. When we come back, we're going to look at the markets and talk about trading for corn.
Well, it's definitely earned me more money. Just like Decatur, they were paying 70 cents more for summer corn there in August. We were hauling corn 100 mile for 40 cents, and we're making 30 cents, and I wouldn't even known that price was probably on there. I wouldn't have thought I'd call it Decatur, but when you go to the Grower's Edge page, then it takes all that running around out of it for you.
Welcome back to GrainTV. We are live for the morning trading session. Brock, what are we seeing on the board this morning?
March corn is up 5. January soybeans are up 4.5. Wheat on Chicago is 9 3/4 positive, and Kansas City is up 6.5. Looks like the dollar index is gaining a little bit more strength today. Going to be negative for our grains going forward, but we are rallying in the face of that.
I know the markets are pretty flat right now, Brock, and I know most people are probably waiting for one sign or the other for this market to either chug higher or to drop off. But farmers, I don't want you to lose sight of the fact that this spot corn basis is red hot, and I'm already starting to think that this market's showing signs of topping out. Let's take a look at what the spot corn basis has been doing, not only across the U.S., but also at a key market at the Gulf export. And what we're seeing at that export market is basis levels actually starting to weaken. We've seen an 8-cent drop-off since the start of December. That's a significant move this time of year and with this much supposed strength in the marketplace. So again, I look at this and say, if I'm a farmer, I got to be moving some cash grain, or at least taking advantage of this strong basis right now. Wouldn't you say, Brock?
Yeah, I'm right there with you, Kevin. We know the futures have been trading mostly sideways in a tight range, so if farmers are looking to pick up some extra cents on their cash sales, they need to be looking at the basis market right now.
Yeah. On beans, maybe I'm not so aggressive on marketing beans for basis improvement, because I think there is still some possibility that we could see some upside. The bean basis at the Gulf has backed off a few cents since December, not near as much as we saw in corn. So I'm still a little more bullish on bean basis, but corn, I really got to take advantage of this right now and take advantage of it by selling spot corn before the new year hits.
Yeah, I'm right with you, Kevin. Make your cash sales for corn, and also to take advantage of our 10 free trades for the month of December. If you open an account by the end of December, we'll give you 10 free trades for January. Make sure you get a hold of us at 877-GRAIN07. Take a free demo at grainhedge.com. Follow us on Twitter or get a hold of us also on Facebook.
Hey, have a great day, and we'll see you on Thursday.